Ever run a business in Thailand and felt that little sting of confusion? You're looking at a healthy profit on your P&L statement, feeling pretty good about it, and then your accountant hits you with a tax bill that's based on a much, much higher number. It's a really common and frustrating puzzle, but don't worry, today we are going to solve it together. All right, let's just get right to the heart of it, the big question. Why is your company's accounting profit not its taxable profit? It just feels completely backward, doesn't it? But trust me, there's a clear logic here, and once you get it, you'll really have the key to understanding your company's tax obligations. So let's make this really concrete. Imagine a company, we'll call it BKK Trading. Their books are showing a solid 2.5 million baht profit. Fantastic. But then, when tax time rolls around, the government sees a profit of almost 3 million baht. Okay, so where did that extra 455,000 baht just come from? Let's find out. The answer is actually pretty simple. Your business is playing by two different rulebooks at the same time. And no, this isn't a glitch, it's totally by design. You see, accounting and tax law have completely different goals. It's kind of like playing chess versus checkers. You're on the same board, but the rules and how you win are totally different. So first up, let's talk about the accountant's rulebook. Accounting profit is all about telling the true financial story of your business. It's for investors, for the banks, and for you, the management team, to see the real economic performance. It's a story about the company's health, and it even tries to account for potential future losses to be conservative. Now, let's flip over to the tax authority's rulebook. Taxable profit has a very different goal: collecting revenue with absolute certainty. The tax department isn't really interested in your company's financial story. They just want cold, hard, provable numbers to make sure everyone pays their fair share according to a strict set of rules. So, how do we bridge the gap between these two very different worlds? Well, there's a formula for that. And this formula is the secret key. It's like the Rosetta Stone that translates one rulebook into the other. Here's basically how it works. You start with your accounting profit. Now, you might get to subtract some special tax incentives, which is always nice, but the real game changer and the thing that usually increases your tax bill is this middle line right here, the add backs. These are expenses your company definitely paid, but the tax law says, nope, sorry, you can't deduct that. All right, so let's put on our detective hats for a second. We're going to investigate and find these add backs. A good way to think of them is as the usual suspects, expenses that are perfectly fine for your business, but they are on the taxman's no-fly list. So here are our main culprits. A director's personal golf membership paid by the company? That's an add back. A traffic fine for a delivery truck? That's a penalty, so it also gets added back. An expense with no receipt? The taxman says it's a no-go. Even provisions your accountant makes for future bad debts are a no-no until that loss becomes real. But out of all these suspects, one of the biggest, and honestly often the most costly, is depreciation. This is just a classic case of the accounting story hitting a brick wall with the tax code's super rigid rules. You see, your accountant depreciates an asset based on its useful life, but the revenue code has these really strict maximum annual rates. You can see the rates here for buildings and equipment, but now zero in on that line for passenger vehicles. It's not just the 20% rate that matters, it's that little note in the parentheses that trips almost everyone up. And there it is, the hidden rule. This is a classic gotcha moment in Thai tax. For tax purposes, a passenger car's value is capped at 1 million baht. So that beautiful 3 million baht luxury car for your top executive, well, as far as the tax man is concerned, it's a 1 million baht car. Period. All right, enough theory. We have our formula. We've identified our suspects, including the big one, car depreciation. So now, let's put it all together and finally solve the BKK Trading Co. puzzle. Let's break it down. We start with their 2.5 million baht accounting profit. Now for the add backs. The director's golf membership, that's a personal expense, so we add back 40,000. The traffic fines, that's a penalty. Add back 5,000. They were a little too generous with the donation, so we add back the 10,000 that was over the limit. And now for the big one, the car. They booked 600,000 in depreciation, but the tax rule only allows 200,000. That's a 400,000 difference that gets added right back. And just like that, 2.5 million becomes 2,955,000. Puzzle solved. So, what's the bottom line? Well, we take our new net taxable profit of 2,955,000 baht, we apply the standard 20% corporate tax rate, and we get the final tax bill, 591,000 baht. This is the number that matters because it's based on the taxman's rulebook.
Of course, calculating the tax is only half the battle. Now you have to actually file the right forms and pay on time. But don't worry, the Revenue Department has a pretty clear two-step process to make it easy.
The tax year is split into two key filings. First is the mid-year return, or P&D 51. Here you just estimate your full-year profit and pay half of the expected tax. Then, after your accounting year ends, you have 150 days to file the final audited return, the P&D 50. You use your final numbers and pay off the rest. 2 steps, 2 forms, and you're good to go.
You know, if this still feels like a lot, you are in very good company. Even Albert Einstein said, the hardest thing in the world to understand is the income tax. But now, just by understanding that there are 2 rulebooks and how to reconcile them, you really have the key to navigating the whole system.
So I'll leave you with this question to think about. Now that you know about the 2 rulebooks and the usual suspects, what profit puzzles might be hiding in your company's books? It's a great question to ask your accountant. Thanks for watching.